Welcome back. So in this next section, we're going to talk about retail banking versus investment banking. So before you dive into trading, it is important to understand the differences between retail and investment banks, as well as the various governing bodies that oversee money saved and money spent. The easiest way to break down the function of banking is understanding why and who they serve. What type of client are these individuals looking to serve or provide service to? Investment banks are arranged capital for individual clients to invest into capital markets. Capital markets, the part of the financial system concerned with raising capital by dealing in shares, bonds, and other long-term investments. So these investment banks will also provide counsel to companies looking to platform buyouts and mergers and initial profit offers. Or initial profit offer. This is when private companies sell shares of its stock for the first time to the public and become a public company. When a company makes this transition, it is no longer in the hands of private owners and investors, but is now under public ownership. You can consider this the beginning of the road to going public on the stock market for you and I to trade, as private companies cannot be traded by you or I until they become public. When company Q wants to buy out company Z, they will also look to have an investment bank advise on the deal. This allows sound energy in the eyes of the public, as when it comes to sentiments of fundamental side, these tend to be a very big deal. So company mergers and acquisitions, etc., are a very big deal when it comes to investors. People who have investments inside of those companies, whether it's Q or Z, everybody wants a smooth transition, and people are looking towards the future of how that merger or acquisition's performance is going to be. So it's the integrity of people's wallets, their portfolios, etc. Everything's on the line when we have these big things happen, and the mediator or the individual that's going to provide the legalese and the sound and secure transition over these mergers and acquisitions is going to be your investment banks. So examples of investment banks would be like Citigroup, Goldman Sachs, JP Morgan Stanley, Credit Suisse. To attempt to prevent conflicts of interest, investment banks aim to be hands-off when it comes to market profits of companies they work with. At the end of the day, its three main duties are usually chalked up to be research. Research is the section of investment banking that reviews companies, handles reports on said companies, and research the company's ratings. This assists with traders in sales. So this is sort of the report card that you or I will get eventually quarterly. Mergers and acquisitions, as we just spoke on before, is an overarching, reaching umbrella of companies pairing and gobbling up another. Think Disney. You have Disney and its various acquisitions. They bought, Fox Family Worldwide, Pixar, 21st Century Fox, Epic Games. They have a hand in just about everything. So each time one company is gobbled up by another, it's essentially investment banks that will oversee the acquisition. Then we have retail banking. Retail banking will be the banks that you or I deal with mostly. These will be your local banks that take the time to help you open up a checkings account, a savings account, direct deposit for your 9 to 5. These banks will make bank from charging fees to opening accounts or interest from various loan styles, overdraft fees, etc. Examples of retail banks would be Bank of America, Wells Fargo, Chase Bank, not to be confused with JP Morgan as the investment institution. And then we have governing bodies in banking as well. These are the same governing bodies that we spoke of when we talked about Adam Smith. So we have the consumer, the producer, and the governing bodies that will essentially monitor them. These entities have been established throughout the history of finance. Due to being American, I will provide the background and functions of the institutions that operate on my soil, as well as the most familiar to me. However, depending on geographical location, your nation will most likely have the equivalent, and it comes to mind when these functions are mentioned. So here in the U.S., we have the IRS. Let's start with them. We will go ahead and start with, the one that we are most familiar with, whether we're investors or not. So the IRS, if you are a tax-paying citizen, you have been dealing with the IRS during tax season since you have begun working at any job that provides you a paycheck. The acronym stands for Internal Revenue Service, and the duties of the IRS is to collect U.S. federal taxes. The IRS falls within the Department of Treasury. This was established 162 years ago in 1862. The lead of the IRS is titled the Commissioner of Internal Revenue, and the gentleman currently sitting in charge of this position is Daniel Werfel. He is the 50th commissioner and, 50th commissioner appointed. One of the commissioner's most important responsibilities with respect to the internal revenue laws is setting the Treasury regulations administration by the IRS. Treasury regulations provide the IRS to collect from you and me as we are corporate taxpayers. They will also conduct audits to ensure, taxpayers are abiding by the law, etc. The main form collected will be by the W-2 or the 1099 form. And then when they do come knocking for corporations or you or I, they are claiming higher than normal amount deductions, failing to declare the correct amount of income on your reports, claiming falsely. Auditors will keep a watchful eye and execute accordingly. Sometimes individuals need to pay back or back pay. Other times they need to spend a little time in prison. Fun fact, the IRS emerged to collect money to fund the Civil War. Look into it. We are still paying taxes. Let's see here. The Federal Reserve will be the next one. So next on the list, we have the biggest bunch of goons I'm sure you've heard of. This is the Federal Reserve. So the FRS stands for the Federal Reserve System Establishment in 1913. This is the central bank of the United States of America. Investopedia coined it as the most influential financial institution in the world. However, I would argue the IMF, aka the International Monetary Fund, or BlackRock, would probably tell the Fed to hold its beer. But let's get back to business. The Fed was created to provide the United States with a stable monetary system. It is a collection of 12 reserved banks, or the FRB, Federal Reserve Board, and it is the nucleus of our central banking monolith. There are 7 board members on the Federal Reserve. The Fed both responds and answers to the federal government and Congress, while the banks it overlooks rest in the private portions of finance. Under the Federal Reserve Act, its duties are to stabilize prices, moderate interest rates, maximize employment, regulating the banks, minimizing banking panic, create monetary policy, and overall regulation. Within the Fed, you have a smaller batch of entities called the FOMC. This group collects information and sets monetary policy. So the Fed is the banker's bank. The Fed is the government's bank. In the fiscal year of finance reports and announcements, they will come from the Fed, and they are key. So these are your earning reports, quarterly, yearly, etc. These are your company's report cards. These are the report cards that you need to see to make sure that your companies that you are choosing to put inside your portfolio or trade in and out of the day are sound. Next, we have the SEC. This is the U.S. Securities Exchange and Commission. It was established in 1934. The SEC was created after the Wall Street crash of 1929. It is an independently working government agency operating under the umbrella of the U.S. federal government. The duties of the SEC are to facilitate capital formation, maintain fair and efficient markets, and all the while protecting its investors. In the public work of stocks and its markets, it's vital for individuals to know what is going on with their investments. So there needs to be a level of transparency that comes from earning reports. We will go over earning reports deeper into this course, however. But what we want to know now is that these reports are curated through reporting by the SEC, so it provides investors a sound peek into their choices at certain parts of the year. The SEC has 33 chairmen throughout history, and the latest is Gary Gensler. If you ever hear his name come up, he is the chairman of the SEC. The SEC also has 5 commissioners appointed by the president, and only 3 out of the 5 will be acting at one time, so it's sort of like a bench in sports teams on rotation. There's 5 people on the team, 3 people are out on the field out of 5. The other 2 are sitting on the bench, and then it rotates, etc. In a nutshell, it is providing budget reports to the public, annual reports of companies, general overall financial reporting. The next will be the FDIC. The FDIC stands for the Federal Deposit Insurance Corporation. This is an independent agency created by Congress to maintain stability and public confidence in the nation's financial system. The FDIC examines financial institutions for safety, it backs the protection of the consumer, resolves large issues in big financial institutions, aka handles big bailouts. Created as a product of the Banking Act in 1933 during the Great Depression, it was enacted mainly to provide a safety net for future problems as well as hopes to restore faith in banking to the American peoples after the Depression. The FDIC also acts as an insurance when it comes to accounting in certain portions of the bank. So when you sign up for a bank brokerage, you may notice the FDIC seal at the bottom of the line or on the bottom fingerprint of the important documents that you're signing off on. So this notes that institutions you may be opening an account with is insured with the FDIC. This basically states that if the bank fails, some types of accounts may be covered, particularly any deposit accounts. Disclaimer: stocks, mutual funds, and bonds, for example, are not covered by the FDIC. Instead, they will be covered by the SIPC, or Securities Investors Protection Corporation. So here, the SEC will cover deposited amounts when offered, meaning the deposited amounts are insured only against the failure of a banking member. The deposit loss that occur in courses of the bank's business, such as theft, fraud, or accounting errors, must be addressed through the bank or state or federal law.